Stop looking at your stock portfolio for a second. We have a problem. In a normal world, the financial markets follow a script. When investors feel brave, they buy stocks and real estate. They party. When they get scared, they buy gold. They build a bunker. But right now, that script has been shredded. Stocks are partying like it's the dot-com boom, priced for a perfect future. Yet simultaneously, gold is screaming that something is broken, hitting all-time highs alongside the very assets it's supposed to hedge against. This is not normal market behavior. This is a glitch. For 40 years, gold was the boring grandpa of your portfolio. It averaged a cute, respectable 6 to 12% annual return. It was slow. It was steady. It was on fine. But look at the last 5 years. Gold has been ripping nearly 20% per year. This lifeless, shiny rock is putting up numbers that look more like a tech stock than a precious metal. And the scariest part? Nobody can agree on why. You have traders, economists, and Reddit analysts arguing in circles, but none of their traditional models fit the data. Let's kill the obvious theory first. Inflation. Everyone assumes gold is skyrocketing because groceries and rent are expensive. It makes sense intuitively, but the charts prove it's wrong. If gold were purely an inflation hedge, it would have exploded back in 2021 when the CPI was going vertical, but it didn't. It barely moved. Gold only started gaining this insane momentum recently. So if it's not reacting to the price of milk, what is it reacting to? It's reacting to a silent breakup happening on a global scale. The rise in gold is actually a story about the fall of trust. Foreign countries are quietly losing faith in the US dollar. They aren't announcing it on Twitter. They aren't dumping the dollar all at once. That would crash the global economy. Instead, they are doing what disgruntled employees do. They are quiet quitting the currency 20 years ago. Central banks held over 70% of their reserves in US dollars. Today, that number has bled out to 58%. That is a massive trillion-dollar shift. They are telling the US, we still like you, but we don't trust you. So where is that money going? It's going into the vault. For the third year in a row, central banks have bought over 1,000 tons of gold annually, double their average from the previous decade. In fact, 2024 marks the highest gold buying year in history. This isn't a trend. It's a panic room being built in plain sight. This is what we call institutional anxiety. 95% of central banks expect their gold holdings to rise over the next year. They are nervous about U.S. debt. They are nervous about sanctions. They are nervous about the system itself. And this brings us back to the glitch. We are seeing a market with multiple personality disorder. Stocks are priced for optimism. Gold is priced for disaster. Bonds are priced for confusion. When stability slips, gold wakes up. And right now, gold is wide awake. This isn't panic selling yet. It's preemptive positioning. The biggest players in the world are hedging against a future they don't fully trust. The market is sending mixed signals, more mixed than a bad date asking about your love language while saying they want nothing serious. But the data on gold is clear. The smart money is quietly moving toward the exit. The question is, are you watching the party or are you watching the door? Subscribe for the truth. Thank you for watching this amazing video. I'll see you in the next one.